Wall Street rebounding across the board Friday afternoon from Thursday's sharp retreat. Let's check the markets with Chris Zaccarelli. He's Chief Investment Officer at Independent Advisor Alliance. Happy Friday to you, Chris, and thanks for joining us.
Same to you. Thanks for having me.
Well, Chris, I got sort of disappointing earnings today from the likes of American Express and Honeywell. Are you concerned about earnings justifying the high valuations that we're seeing in the markets?
Well, I definitely think earnings are important, obviously, each quarter. And we do want to see some follow through in terms of what's been predicted. The market's obviously very expensive based on expectations that these earnings will be really good. And so it's been a mixed bag. We've seen some disappointing earnings this morning, as you mentioned, but other earnings have come through pretty strong. And really what we're looking for is forecasts going forward. We really want to see if this will continue. So I think it's the forecasts that matter a little bit more than the earnings at this point.
And it seems though data is moving the markets today. We got strong data on manufacturing PMI for the first half of this month, the highest level since May of 2007. Are you anticipating more strong data on the economy to come?
We are. I mean, I think when you see those PMIs, which anything above 50 is expansion, and when you see it about around 60, to your point, that's extremely strong levels. And so if we can see this type of expansionary data in terms of both macro and micro when it comes to earnings, that'll really go a long way towards pushing the market even higher than it is now, although clearly valuations are high with the S&P 500 around 23.8 times this forecasted year's earnings.
But what about the outlook then for U.S. Treasury yields? If we're going to continue to get strong economic data, the yields have been rather steady of late, and that's helped tech stocks. Do you anticipate the yields are going to be turning up again?
We do. We think what you saw earlier this year reflected a lot of expectations for both growth in the United States as well as synchronized recovery around the world and an increased vaccinations. And so, to the extent that we've had a little bit of a drop in vaccination effectiveness across the world, and as well as not seeing that synchronized global recovery, we did see interest rates come back down a little bit in the last month or so. But we expect at least U.S. Treasuries to go higher and probably take some of the sovereign debt around the world higher as well in terms of yields, lower in price, higher in yields.
Well, how much higher and how fast?
That's really the most important question: is how fast. I mean, as you saw earlier, yields went up to around 1 3/4. Then they came back down to almost 1.5. I think you can see yields cross that 2% mark this year. Now, whether it does it in the next few months or whether it does it later in the year really will depend on that data. If we continue to see strong economic data, and most importantly, I think it matters what the data is around the world. If you see Europe continue to improve, see their economy do better, as well as have increased vaccinations, I think as long as yields around the world start moving higher, that will be one factor in allowing the U.S. yields to move higher as well.
Well, Chris, we've got the big tech titans reporting next week: Microsoft, Amazon, Apple, Facebook, among others. Yields, of course, have been the high yields have scared off some investors, those big tech titans. Given your outlook for yields, how should investors play the market? Should they still play this reflation trade that we saw strong till March, or should they go back to tech stocks that have been strong this month?
It's our view that the cyclicals, like industrials, financials, they'll be the ones that will benefit more in the course of this year. So we think those tech titans that you mentioned, they have great businesses. Obviously, they really proved their worth through all of last year, and we expect that they'll continue to do really well in terms of increasing earnings. We just think a lot of that is in the price already. So from an investment point of view, we're definitely looking to put additional dollars to work in industrials and financials, and would consider a technology sector more of a hold for us.
All right, so you're betting more on the side of cyclicals and value stocks and overgrowth. All
Correct.
right. All right, thank you, Chris, for your thoughts.
Thanks for having me.
Our thanks to Chris Zaccarelli of Independent Advisor Alliance. I'm Fred Katayama in New York. This is Reuters, and have a wonderful weekend.